All right. So you all know when we talk about market structure, we're talking about pump and dump pattern. All right. But that doesn't mean you have to basically try to catch this, or trade using on, trading on top of this trend and then exit at all the way down here. That's the best way you can do, but it's not easy. You There is a lot of time you will get trapped thinking that this trend is reversing, but it's actually only trapping to just go higher. Well, how can you know when this happening, when basically this pump and dump happens? Let's go a little in depth. This pump and dump, as we talk about a lot, it's not only a pattern that you see in course of 2 to 3 weeks, or in 1 week you see, oh, it came up and went down. It can happen, but you cannot time the market, and you cannot basically force what you think is going to happen. It's actually going to happen. Okay, so now I'm drawing the induction trends. These induction trends are when market willing to continue moving to the direction of trend, but they have to find, or trap, in this case, sellers, so they can buy from them and move the price up. Okay. So the simple induction down here will end up in a pump and dump pattern, and then same thing going to happen again. They will continue making this trend using these inductions, right? And finally, at some point, they start trapping the high for a longer period of time, and that's where you can think about reversal. Okay, which mostly will come with a signature trade, trapping people to follow this trend and then reverse on them. But again, you don't have to catch it up here. This is more like understanding. The only person I know that can trade, or at least manage his trade, catching all these reversals perfectly, is actually our master Dylan. I don't really know anybody who does it better than him. The rest mostly wasting the time. They might show you the winning trades that they cut it up here, prices here, but they don't show you how many times they did the same thing here, sold, and they got a stop hunted. Okay, so you don't know about people's results, but I'm telling you, catching the tops and bottoms, especially for the reversal, it's like you're trying to catch you're trying to catch a falling knife. It's dangerous. You're trying to risk your money and make some money. So you really need to understand, the higher the higher the chance for you, basically it's a smarter risk. Try to take smart risk. Don't just take risk because you're a risk taker and Forex comes with risk. Take your risk because you're smart, you're taking a smart risk, and you get money. So now let's go to the chart. All my points was, you don't need to catch all this. You can identify where price is going and then just find the little traps and trade those little traps. No, that's what exactly I said. I have a question says, pumps and dumps, do they happen every 3 weeks? I just said it. You cannot time this. There is no way you say 3 level, 3 weeks. Just take a look at GBP USD for the past few weeks. trust me, one of the reasons GBP USD dropping that hard is there is a lot of people trying to catch it reverse. So they create more liquidity in the downside. I'll show you guys. They'll create more liquidity in downside, so market will move down. Like simple as that. Now let's go to chart. I made this US dollar Canadian for you guys ready because it's a great example of people trying to catch these reversals. Okay, it's a big uptrend. All right, you see the reversals basically happen, but those are all traps. Let's see. So now you are, let's say from here, even though from before it's a still uptrend, but I'm just going to start from here. So now for this week, price was in an upside. Price was coming up, right? Let me change the color. I think this is good. So price for Thursday, Friday, Sunday, Monday, Tuesday, Wednesday was making higher high mostly compared to this. I know not higher high to this, but they came to the high of the previous week. Notice this. They actually made the higher high, sorry. They keep making higher highs. They came at the high of the week. Then they start inducing people. Where? From high of the previous week. Because now people who wants to follow this are trapped. And look at this multi-session M. So make sure you take the M or W formation where it's basically trap happening. Don't take every M and W you see. This is a clear trap. Market making higher highs, and then at the high of previous week, it's broken. And then what happens? Asian consolidation for hours, almost, let's see, for 11 hours, sorry, 9 hours, price was above this. Before used to be resistant, now it's a support. Okay, that's the logic behind we say, oh, take the M1W at the high of the week, high of the day. That's the logic behind it, because people seeing market is going up. Some people have pending order. In case of pending order, and when there is so much liquidity using pending order, you'll see a wick come up, activated, and reverse. But this didn't happen. Market came above, start playing around this support. Let me delete this because this is where things get funny. Look at this wick. Look at this wick to this support, showing rejection to this zone. And what you want to see is after this M formation and this engulfing candle, a bullish candle coming up with a full bearish close below this. Although it's retesting this support, but we don't really care. Okay? So we don't care it's touching the support or any other shit like this. All we care is that price worked around 9 hours above this support, and which happened to be a high of the previous week. So you already know that reverse happening. Okay? Are you trying to catch a reversal here? No. You know already you know already the take profits going to be at this low. So when you are in here, your first take profit should be low of the wick, which is around here. Same day, your take profit is hit. The second take profit you can go is around here. Why? Because retail trader have their zones in this area that market had reaction. I'm not making any magic. or I'm not hiding any knowledge from you. This is for retail trader, is a resistance, became support, broken, went up, retest. So when market's showing reaction, they think it's something. There is some how can I say, someone told me, why you think price respect that area? Because it's a support. So when there is belief like this in the market, that's why I have my take profit too, right at where they draw their zone. They draw their zone in here thinking it's a support. It's my take profit. Okay? Why? Because if you go it a little, more accurate like this, and then here, not much of a broken, you will see how they came actually below. Came below this zone, acting that this zone is broken. But what you know? What you know is you had the touch here, and then pumps and dumps happening. We don't know yet. These things we don't know here. So let me draw this trend as much as, at the moment we knew about it. Okay, that's all you got in here. So price came below this, start retesting. Now, depending on what you had before, now you can draw a trend with 2 touch, not 3 touch as retail trader believe. Okay, now you can notice that market structure formed in the course of 1 week. Actually, this was basically midweek reversal, and now you have more clear direction. Notice, I'm telling you like you don't have data before, but you obviously have data before. So you know how they move the market, you know how they use inductions. You see, it's almost like I copy pasted here. It's almost like I copy pasted. They came above Friday, Sunday, Monday, Tuesday, work around here, and Wednesday, and then shift back down, touch this trend. That's how trends form. Okay, it's not magic. This is how trends form. Now they induced, move back up. From here, you only can wait for the moment that price finish induction, give you a good setup, and then you want to enter that trade. So what are the chances of entry here? One of them is after this. Basically, it's a little hard to show, not hard to show, but hard to identify. It's basically a multi-session W, this area. That price came to this zone, moved back up, came back below, and I want you to notice something. This is a multi-session W, but if you don't believe it, because I told you just take M's or W that are included in a trap, not every M's or W, correct? Notice the trend I draw. This was the first touch. This was the second touch. This was the third touch. Now, what happened in the second leg of that W? Price broke this trend, retested, showing bearish, candles. Retail trader, what the money do other than support and resistance? I used to say the smartest retail trader wait for break and retest, but that's not the case anymore. So second touch, third touch, they'll break it, retest it. Now retail trader thinking that reverse. And then what in reality happened, it goes up. So if in here you got a W, you are good to take it. This is what exactly happened here. But it's more like a multi-session W. Unless you go in 15 minutes, you'll see it more clear. This still is a good W with a great stop hunt. Okay? Something you have to add when you're trying to, this is, I'm trying to teach you how to trade naked and be profitable. Two things. This is the two key for you to remember. The first pattern I'm talking about right now, which is market structure, this pattern, and the second pattern, in order to make it happen, is daily structure. Daily structure with weekly structure. So when you know how the weekly structure form, and then you look for a pattern just like this, in the day you're looking for continuation. What I mean? Right here. Just look. This day, induction was done, okay? Price stayed around, didn't show really profit. When they're not showing profit a lot, then you have to think that why they're not moving, because there's no liquidity. What happened here was high of the day. They came to the high of the day, induced people, they're going up, a mini little weekly structure again in the next week. It's actually from here you can draw it, but I'm gonna just make it small. See, they came, right, take the high, grab the orders, and also at the same time using this 3 push, they add a lot of people in the market and then reverse on them. Came, take their stop hunt, even if it's here, break this low, you see, break this low, and then came back to consolidation. Now you have from here, now price is in consolidation. Now what you have? Now you have a trend that was almost broken, came back up, consolidating, multi-session W, induction was done, not going up because liquidity wasn't there, so they came back down here, okay? What I expect you to know is not jumping into buy here and not even jumping to a sell here, and you wait for your perfect setup to take it, okay? And why I'm saying not sell it here, because you are already, in line. All the traps are in line that sellers are being trapped. You see, sellers are being trapped here. And then, what happens? Let's show here. Look at here. All the way from this zone, they stayed below. When they reversed from here, instead of you think now it's time to go up, you can think how much time they're spending below this zone. That will create sellers. Get them stop hunted, add some buyers in, go back down. Why back down, guys? Because there is still people did not committed here, didn't commit. So market has to go down. If people don't commit, market will react. So make them commit. That's how it is. There is no choice for retail traders. We as a human are so predictable. As a human, we are predictable. And market makers are predicting us, creating patterns, problem, reaction, solution. They'll create patterns. So the majority, because they can predict us, so they know what majority will do, they create the pattern, so majority get trapped. So what happened now? Now intra banks, big banks, institutions, market maker have enough people selling so you can buy from them. This is a business. It's not like, oh, market maker can touch this support and now it's going up. Support doesn't make market maker money. It does make them money by using the pattern, but support and resistance is not something that, market is reacting to it because there is like zone, support. Those reactions are because human expectation, guys. We, as a retail trader, I don't consider myself as a retail trader, but retail trader have expectation. When they see a wick down here, they want to see downtrend all the way till the rest of year. I don't know what they think, but this is a clear traps here for you. In order to understand this market, you need to understand traps. If you don't understand it, guess what? You will get trapped. You will get trapped till you better learn it, or you lose money and give up and say, I'm done. I cannot figure it out. That's what happened to a lot of people, right? So let me just continue here. Notice to this zone. This daily structure, I told you it's real good. Look what happened. Stop hunt below, forming this W. This W formation here, you see it as a W, right? But only if you draw a zone here, now you're seeing rejection of resistance. Correct? Can everybody see it in it? Or am I going crazy or making it up? Yes. Good. See, this W is rejection. Now let's make it M formation. Let's make it M formation. If you draw it here, it's a support. It's a support that is being rejected. If the zone be here, this is going to be break and retest inducement. So this is the reason M's or W are important, but at the same time you can get trapped. That's why retail get trapped. It can be break and retest, it can be rejection, consolidation. People sell this here as it's consolidating, ranging market. Let me sell it. You see now, in here they buy, in here they sell. This is the easiest way for them. Ranging market. We love to see it actually. All right. So let's move it on. Next week started. What happened in this week? We went up. Where is the high of the week? In here. What market maker has to do? He has to let people believe that we are going up. So now they're working above this zone until finally they accumulated enough order so they can come back down, hit their stop losses. Okay? Hit their stop losses again in the zones that retail trader have their support resistant plot. Mostly here is the ideal take profit, because market will hit it and then trap people right there. You see, break that zone and retest it, break, 1 candle, 2 candle, 3 candle, 3 30 minutes candle, 1 hour and a half, market is spent below this zone while they're making lower low all the way from up here. Okay, they're making these lower lows, break this, and next thing you know, continuation. Now what you are seeing again, it's a multi-session W. And what else you see, guys? Daily structure. So only if you find pairs that are done with induction, they trap enough as inducement, and then wait for that ultimate day, because that great move happened with this pattern, guys. That great move usually not going like this. Market maker cannot afford. If you bought it here, you thought that, oh, it's done. If you bought it here, I'm sorry, but it's going down, because they have to stop hunt you, because next day is a new day. you bought it above the high of previous day, market consolidating below this zone, they have to induce. Notice this is signature trade here. They have to induce and go. So the best days, the days that it's like treat for you is when this weekly, daily structure forming in line with weekly structure. See this pump and dump? This is the dump. This is the dump. This is the pump day. Pump day happened with the weekly daily structure. Just like here. Just like here. And if we go forward to any other, days, that's exactly the same thing that happened. Notice this is high of previous week. They came, rejected first, spent some times here trapping everybody. That is still, it's a sell. Okay, it's a still sell. Notice in the 4-hour chart right now, this is still looking like trap, but a small one, because like in 4-hour daily, it's just the smaller version of same thing. Let me make this better actually. This is what you're going to see in 4-hour. Okay, and this little zone here that broke it for a 1 candle maybe would be this, or 2 candle, 3 candle, I don't know. Depending on structure, this case would be more, probably 4 candle, even more. When they break this, retest this area, now they're above the high, induced a lot of people with this push, and then came back down, induced people. So now you're seeing another weekly structure, pump, dump, right? You don't have to catch the tops and bottoms. You have to understand what the fuck happening in the market. You see, high, this resistance for the retail trader became resistant again. Notice trend is again broken, retested, retest this zone, and then stop on them. Again, multi-session W. Again, the best day for you to trade it, the best pattern, stop hunt low and then high. So you could have taken this. Next day, same thing. Now price want to go high. So every day, what do they have to do? It's just stop hunt a little and then go back up. What is now? What is now? Break of this, came to the high, acting as they're breaking it to go up, and then reverse on them, just aggressively. And this is, I'm not sure this is yet. This is not even full reversal. Okay, so from here, you could basically know midweek reversal, pumps, dumps, pumps. Now another dump is on the way. To where? To here or here. Look at it. Like, I'm not crazy. I'm just expanding what happened in a week before. This is 30 pip you're going to lose. Not lose, I mean miss. If you sell it all the way from here, and you're a swing trader, not me. I'm not holding my trade weekend or whatever. But look at it. Monday, Tuesday, they came right back down, form a W. What is this day structure? Stop hunt low, came up. This day, consolidation, stop hunt low, up. And then next thing you know, they need more liquidity. So they break this. First of all, they break this, retest, inducement, break the other high. So they're forming real higher highs, retest this zone, induce. What did I say? M formation happens as a break and retest and then goes down. Okay? If it's not really easy for you guys to grasp this, or they break and retested it, please read my book. It will help you. identify every single of these traps. As easy as draw this line, see what market maker is up to. They buy, you sell. They sell, you buy. Simple as that. You put it down here. See, this is the zone here. Let's go up. This is the zone here. And then they have this one up around here, okay, as a main. So market came aggressively below and then came back up. Notice they are still didn't break this high. They're forming lower low. They're forming lower low, breaking these zones, breaking the zones that the human expectation is there. And then holding by this trend line. Next thing you know, daily structure. So make sure to backtest this enough, guys. I have 3 minutes time. So let me just put this up here. If you're interested, send me a message or join Forexia Academy. I know the free stuff is good, but trust me, there is a lot more than this that we are offering right now. Whether in my VIP or Forexia Academy, you don't want to miss it. If you miss this information, guys, you're just going to give away your money. As simple as that. Okay? So make sure to get the book by forexia.net/GPG. Where is it? Right here. And you can sign up to Academy. You have in my community. If you're not, when you log in, when you give your email, you'll get a link to my community too. Backtest this lesson. If you have any question, let me know in the chat. I'll be happy to help you guys understand these things more and more. Stop, giving away your money. If you don't know this stuff, I highly suggest you do not trade if you don't know this. All right, guys. Thank you for being here. I'll have another webinar coming up for the VIP. I'll see you guys there. Peace.